I'm Charlotte McLeod with investingnews.com, and here today with me is Jeffrey Christian, Managing Partner and CPM Group. Thank you so much for being here. Good to catch up with you.
Always a pleasure. You always have good questions.
Oh, good. Okay, I hope they will measure up today. I think where I wanted to start, so you told me at the beginning of last year that usually you'll assign a word or phrase to the coming year. So for 2024, do you have one?
Yeah, we're calling 2024 another year of living dangerously. We had used the term a year of living dangerously. I think it was in 2008 when things were wild. And we look at 2024, 2025 as a similar period of uncertainty.
Okay, that is very interesting, maybe a little bit alarming for people. Do you see any other parallels to 2008, or is it just we're living dangerously, or do you also see parallels between the two?
Well, it's interesting because in 2008, there were actually a lot of political factors that were leading to the financial crisis, the global recession, the Great Recession, the global financial crisis, and the U.S. invasion of Iraq, which led to a sharp and steady increase in OPEC oil prices. And people didn't realize it because OPEC did what Sheikh Yamani had told them to do 20 years earlier, which was to slowly and steadily increase the price and to make sure that there weren't supply disruptions. You know, as long as people don't have to get into lines at the gas station, they'll pay whatever you charge them for the gasoline. And they did that from 2003 when we attacked Iraq up until 2008. So there were political things, but they were not as prominent and obvious as they are now. And I think that one of the big parallels is that you're looking at a year in 2024 where politics will be much more important in this investors deciding whether to buy or sell gold and silver.
Right. And as we were talking before we turned the camera on, it's an election year in 2024, which I'm sure is related to what you're talking about there. So what should we be paying attention to when it comes to markets and gold, perhaps in an election year?
It's really, you should be paying attention to everything. You know, unfortunately, politics are harder to project and all. But the reality is it's an election year in more countries, more than half of the countries in the world. So it's a very important election year. Obviously, there's a lot of attention on the U.S. economy and the U.S. election. You have these two geriatric people who are woefully unpopular and deeply flawed as the likely candidates. And, you know, you can honestly say that democracy's in the balance in the United States. But you can see similar patterns in various European countries. Not so much in the UK, but there are big issues. There are more people in the UK who wish they had not left the EU than are glad they did. Ireland, Canada, China, Russia has an election, I think, next month. It's going to be a puppet election, but it is something there. And then a host of other countries throughout Asia, Africa, Latin America. So it's a political year. It's an election year. And in many of these countries, you have a rise of nationalism. You have a rise of nativism. You have a rise of tribalism. And you have a rise in economic nationalism. You have all sorts of regulations that are being imposed around the world that are causing static in the overall economy as well as people's lives. And that opens up the opportunity for major economic problems and financial market problems where you have regulations and all of a sudden the banks say, I'm sorry, but that regulation is too stringent. I can't roll legitimate business loans forward. You know, we've seen this in the past, and there are legislation in Canada, the United States, and Europe that have that potential unforeseen consequence. It's not unforeseen, but it's unintended. You know, and so I think the political environment is going to be very important, and it's going to have a major impact on the economy and the economic trends. We're already seeing weakening economic indicators in a number of countries, and it's going to have a lot to do with the way investors look at the world and say, how comfortable am I being in stocks and corporate bonds and municipal bonds, and how much gold and silver should I have in my portfolio?
And so when you talk about investors looking at these circumstances and starting to make those evaluations, you're talking about kind of your everyday retail investors may be becoming more interested in gold and silver this coming year?
Well, yes. It's not just retail investors, it's also institutional investors and family offices. There's been an enormous rise in the amount of assets under management in the private equity sector. And so it's really across the spectrum. And in terms of the timing, our expectation is that a lot of this concern increases in the third and fourth quarters. So it's the second half of this year. We think the first half of this year could be stringent for investment demand for gold and silver, continuing what we saw in 2022 and 2023. But that by the third quarter and fourth quarter, there may be a radical shift in the political environment, political expectations and concerns, and that could be much more visible, having a much more visible negative effect on the economy and thus financial markets. So we think that the second half of 2024 might see a heightening of this investor interest in gold and silver. We've seen some decline in gold demand over the last year. We saw a tremendous decline in silver investment demand on a net basis last year, and we're seeing an acceleration of that investor disinterest so far this year in the first 2 months.
Okay, so yeah, as you explain that, it makes sense how this could be really an important determining factor for people when they look at, do they want to hold gold and silver? For gold and silver, what else is on your list? What's next on the list in terms of importance for gold and silver impactful factors this year?
Well, the major factor is investment demand. And our expectation is that the second half will see stronger demand based on all those economic things I was just talking about. Second thing is central banks. Now, you saw central banks buying about 12 million ounces of gold last year on a net basis. And on a gross basis, they bought about 16 million ounces, but 7 million ounces of that, nearly half of it, was China, People's Bank of China. And they were buying metal that was building up in the Chinese market because investors and others didn't want it. So the investors were selling gold in China for a significant part of 2022 and 2023. And, China, the government has a policy that gold in China stays in China. So it was building up over the Chinese market. And the People's Bank of China, which had stopped buying gold in June or July of 2019, when the price went over $13.50, said, okay, we'll start buying. So they bought about 7 to 8 million ounces last year, and that was all in the domestic market. That buying is behind the market. We expect the PBOC to continue to buy gold, but at a much lower rate going forward. Then on the gross sales side, you had about 5 million ounces of sales last year, 4 or 5 million ounces of sales, but that was mostly Uzbekistan, Kazakhstan, and Turkey. And they sold gold in the first 4 months of last year because they needed foreign exchange, because the imports into those countries were so high. And the imports into those countries were high because they're all acting as interpos for Russia. So you can't ship stuff into Russia, but you can send it to Uzbekistan for Uzbeki demand, and then the Uzbekis sell it to Russia. And that business of sanction busting is very lucrative. So there was a buildup of personal wealth in Uzbekistan, Kazakhstan, and Turkey. And so you had an increase in demand for imported goods in those three countries. They ran out of foreign exchange, or they ran low on foreign exchange. So they sold a lot of gold in the first 4 months of last year. That probably won't repeat this year. So we're looking at central banks that were saying, how much gold will central banks buy this year? Well, they bought on a gross basis 16 million ounces last year. It may be closer to 10 million ounces, but the sales that were 4 million ounces last year probably will be much smaller, maybe 2 million ounces. So maybe it's 8 to 12 million ounces again this year in net central banks. That's the next thing. Then you have mine production, which is being hit by this resource nationalism, environmental things, and the strange nationalism, so mine production in Mexico is off. But it's an election year, and AMLO has said that he wants to ban open pit mining. That would be devastating to the mining industry in Mexico. It's not going to happen, but the fact that they're talking about it causes problems for capital formation in the mining business.
I'm curious where you've put the Fed on the list of all the factors for gold this year. Where does the Fed fall in terms of importance and what it's going to be doing?
Monetary policy follows fiscal policy. The problems are not in the monetary policy side, it's in the fiscal policy side. And politicians love to have consumers blame the Fed for the problems the politicians have created. We see this in the gold market where, in the 90s, bullion banks were doing a lot of things, and people started blaming the mining companies for doing it. And the bullion banks would say, yeah, that's terrible. It's like, I'll gladly let you blame other people for my misfeasance or my bad behavior. And you're seeing that. So when we're looking at the economic environment, we look at real GDP, supply and demand. What's the real supply of goods and services? What's the real demand trends in goods and services? Then we look at fiscal policy, which factors into that. And the monetary policy is the tertiary factor, because the monetary authorities, whether it's the Fed or the Bank of Canada or anybody else, they sort of have to, in an ideal world, they'd be able to do monetary policy independent of what's going on in the economy. But in the reality is they have to react to the bad fiscal policies. They have to support the bad fiscal policies because their job is to try to keep the economy stable, even in an environment where the government is behaving very poorly.
Yes, I remember you've made that distinction for us before. Well, what is really important there? I wanted to check in on how you're feeling about the recession question. When we had our previous conversation back in July, you were seeing potential for a significant recession in 2024 or 2025, but then you revised your expectations, I believe, every quarter. So how is it looking to you now?
Yeah, we revise our long-term 10-year projections economically, gold, silver, other metals, platinum group metals, moly, copper, lead, zinc. We revise our quarterly projections, at least quarterly, our 10-year projections for metals. Some go out 15, some go out 25 years. But we revise those as well as our economic. We have a recession that is more shallow now than we were expecting 2 years ago. The strength in the economies, there are a lot of strengths in the economies, suggest to us that perhaps the recession will be milder than we had expected. And we had already been saying that in the second and third quarters of last year. And it more likely to emerge in the second half of this year into 2025 than in the first half of this year, which is reflected in what I just said about investor demand.
Exactly. Okay. And I wanted to touch on gold price in 2024 and look at where you see it going this coming year.
We're looking for record gold prices. This morning, before we were speaking, the gold price was over 2,100 again. We're looking for a significant, in our mind, increase in gold prices. So we're looking at an average price of maybe 2,050, up from 1,950 last year. So that's 6%, 8% increase, which is very significant on an annual average basis. And that's what's important to producers and jewelers and really should be for investors. On an intraday basis, we're looking for even higher prices this year, obviously, to get to that level. And then continuing to rise in 2025 as the economic and political environment worsen.
Do you have your 2025 projections yet, or is that will come later?
We have them. I tend not to say them in public because we charge a lot of money for it. But we're looking for higher prices in 2025 than we are in 2024.
Okay, fair enough. Okay, so we'll leave gold there for now. I also want to make sure that we touch on silver because you just had your latest Silver Facts and Fantasies event. I believe it's now annual, and if people missed it, they can start to see it online. You're posting it in installments. So I saw you had over 100 questions from people, and I'm sure you answered many of them, but probably not all. What I was wondering is what themes did you see in those questions? What do people want to know the most?
That's a tough question to answer. I mean, that was 5 days ago. But there were a lot of questions about where we thought the price of silver was going to go. There were questions about, is mine production going to be sufficient to meet fabrication demand? There were questions about solar power, because there's a lot of misinformation about the growth of solar power, solar panels using silver. It was up sharply last year. It's going to continue to grow, but there are some wild overestimates as to how fast it will grow and how big it is. So there were a lot of questions about fabrication demand, specifically silver use in solar panels. Will there be enough silver? There are people who are incorrectly saying that, it's industrial demand that will matter in determining the price of silver going forward and not investment demand. And, I've been in the business for almost 50 years now. Next year it'll be 50 years since I wrote my first commodity piece. And I have seen in periods of quiet investment demand for silver, people say, oh, investment demand's unimportant to the silver price, it's industrial demand. I've seen that through several cycles, and it's always been wrong in the past. It'll be wrong in the future. But solar panels, how much silver is above ground? People don't understand the questions of above ground reserves and resources. How much silver is up there? And, some people will call it available inventories. And then you'll have people say, well, mine's not available. It's like, well, it is at some price. But we don't, we talk about above ground inventories. And some of that stuff never gets sold, but some of it does. And so above ground inventories, how much is out there? What prices do you expect it to come back? Will we have to live off of those above ground inventories to meet solar panel demand? That was probably the major set of questions. And then again, people also continue to not understand the difference between mineable reserves and mineable resources. And so it's like, well, I look at reserves and there's only 5 years worth of reserves left in Mexico. It's like, well, Mexico's been a major producer of silver for 600 years. And they've never had more than 5 or 10 years worth of reserve because the Mexican producers have no economic interest to undertake the expensive cost of really drilling out their resources and proving them up into be reserves. As long as you have 5 or 10 years and you understand the geology of your resources, that's fine. And that's true in Mexico, in Peru, in China, Ecuador, Bolivia. And so as a result, you don't necessarily see reserves rising, although in the last few weeks, you've seen several companies report their financials, including increased reserves last year. Partly because of the higher silver price, resources become economically mineable and they become reserves, and partly because they're drilling stuff out and finding it. So it's there. And there's a vast misunderstanding as to what mineable reserves really are. So people look at this and they say, oh, there's only 5 years worth of reserves left. It's like, and then the Mexican miners will say, yes, we're up to 5 years worth of reserves, because we've never had that much.
Okay. It's interesting for me to hear just the themes that emerge and learn what people want to know. I think I'll follow up by asking what your projections for the silver price are in 2024.
We're looking for the silver price to range between, say, $22 or $20. 2022 as a low and maybe $27, $28 as a high. And we're at $23.65 this morning. But we've been trading most of the time over the last 18 months, I think, between, say, 21 and 25, 24. And we think that's probably sort of where you're going to be. But then again, as with gold, we do think that the price picks up toward the end of this year. We have seen incredibly low investment demand in silver last year, following into the first 2 months of this year. And we're kind of worried about that. some of our clients are thinking that the price could go below $20, maybe to 18. We're not convinced about that. But, we've seen very low investment demand for silver. We're seeing a lot of investors selling their silver. Companies, retail suppliers who were saying, I can't keep up inventories. All of a sudden, they have enormous inventories that they'll sell at bargain basement prices. And now they're complaining because the margins have come down, because the margins were inflated for several years by strong demand. So we do think that investment demand will pick up maybe in the fourth quarter, and we'll start seeing silver prices rising at that point.
Okay, good to go over that. And before we wrap up, I think we've got a good overview of gold and silver. I'd love to come back to some of these things in greater detail later. But for now, any final thoughts you would share with investors as we head forward into the year?
Yeah, our investment process is that we advise clients on, and it's been this way forever. Yeah, since the 80s, is you should have some portion of your wealth should be in physical gold and silver that you own as an insurance policy against other assets deteriorating. But not all of it. And then you should have some physical gold and silver and some mining shares spread across the mining sector that are longer-term investments. You have a 3 to 5 year horizon on that. You will sell when you see prices high, and then you will buy them back when the prices fall back. And then you should have some that is much more short-term investments, and that may include mining shares and ETFs, but it also includes futures, forwards, and options. And that stuff you can trade back and forth. And that's really the best way to invest in gold and silver. We see a lot of older people, 40 to 65, 70, who understand that. But there are a lot of younger investors who only focus on that short-term trading stuff. And we're starting to see now, as people who were gruesomely overpaid in the tech sector being laid off, that they're starting to say, well, maybe I should have some money squirreled away. And one of the things that we're finding is a number of 20-somethings and 30-somethings who have that money socked away, but it's either in cash, earning nothing, or in the stock market, and they haven't diversified their long-term portfolio. And unfortunately, I don't see anybody other than CPM Group, the World Gold Council, the World Platinum Investment Council. I don't see any organization in the mining sector doing the groundwork, saying, hey, young folks, look at the state of the world. This is another year of living dangerously, and you should have socked some of that money that's in record levels of stock market. You should have put some of that away. And it's really weird, because if you talk to a lot of these investors who say, stock market, I must be down on my stock position. You say, no, look at it. And they go, oh my God, I've never had this much money in the stock market. Right. The stock market is very high. And this is a good time to cycle some of those profits into precious metals, long-term precious metals, as a long-term insurance portfolio diversifier. And that's really what the message I would leave with investors.
Okay, I think that's a very interesting place to wrap it up. That's another topic I might like to come back and ask you more about in the future. But for now, thank you very much for stopping by to talk about gold and silver.
Well, thanks for having me, and let's not make it 7 months again.
I know, yes, okay. Once again, I'm Charlotte McLeod with investingnews.com, and this is Jeffrey Christian with CPM Group.